The stock market ended the week at all-time highs, and guess what? Gold's going to go out to the end of the week at all-time highs. So thank you, Jerome Powell. Thanks, Federal Reserve. We do appreciate that. But we're going to talk about that and the price action of this last week because it was a very volatile week. But there's other things too that are happening. You know, the market's placing some really big bets on dollar shorts, and those traders aren't getting paid. And so we have this divergence between stocks moving higher, gold's moving higher, dollar's not really breaking down. So what's coming next? Well, did you know there are other central banks that are actually meeting this next week? So we're going to talk about all that and more on this week's Week Ahead video. So I want to thank you for being here. My name is Blake Morrow with Forex Analytics. Like I said, we're going to discuss not only what happened last week, but what we're looking for this next week. What are the events that are going to move the markets? And more importantly, what markets are we looking to trade? So we're going to get into that. But before I do, I want to talk a little bit about this volatility. You know, when you come off of a Fed meeting, and I'll tell you, it's been a tough week for trading. I've listened to a lot of traders. Me personally, I didn't have a bad week. I actually had a decent week. Could have been a lot better if I scalped a little bit more. But when there's lack of follow through, like, you know, the Fed met, we saw a big move in the markets. You got up the next morning, the market is done completely opposite. You come back on Friday, it's come back again. There's a lot of up and down volatility. One of the best ways to take advantage of volatility is going to be through the Trader Funding Program, because we actually have a 20% discount on the Trader Funding Program for the month of September. It's the first time we've ever done that. So if you want to learn how to access larger amounts of capital and take an assessment to see if you can access our capital, you can qualify for up to $1 million trading account. You know, so if you don't have access to $25,000 to $1 million to trade, check out the Trader Funding Program for more information, because like I said, this month is the first month that we've ever offered a discount in the last 3 years for this program. Now, like I said, you can take advantage of the volatility if you're out there scalping around, but if you're trying to take a foothold or get a foothold in the market looking for a trend to develop, it was a difficult week. I do think there's some good trends that are going to develop, especially after this week with central banks that are meeting. So let's go ahead and get into it. Let's talk about everything that's happening this next week. And let's just start off with going to the Forex Analytics. You know, we're going to go to the Forex Analytics main page in the application. And I do want to mention that as I go through this, you can go through your calendar of events. I am actually filming on a Friday. I don't normally film at this time of the week. I usually film on Saturday mornings, but I've got a few things going on this weekend, so you're gonna see the markets actually moving as we're talking, as the market is winding down here on Friday afternoon. So let's discuss all the key events. And again, you can go through Forex Analytics, look through your calendar. You can go through your own calendar when I'm doing this with you. But I'm going to show you some of the currencies that I think are in play, and then we're also going to talk about what's happening in the S&P, gold, copper, crude oil, and even a little bit of crypto. So and then I'll give you my 3 best setups of this week. And then I'll also talk about the setups from last week, so make sure you don't go anywhere. By the way, if you think these videos are very beneficial to you and helps you prepare for your week, you know, get down below, hit the like button, subscribe to the channel so you don't miss any of these exclusive videos only here on Forex Analytics. So thank you for that. All right, let's continue on. All right, so on Monday we're going to have Eurozone and UK PMIs. Now, I am using the week ahead charts. These are the subset of charts that I use only for this video, so you can see all the drawings from last week that we've done going into this week. Now, the reason why PMIs coming out in the Eurozone and in the UK are so important is because it's going to let us know if we still have that US exceptionalism. You know, that story was a big story for earlier in 2024 and even through 2023. U.S. economic data has been notoriously better than in the Eurozone, and a little bit, but not so as much as the UK, but still, U.S. outperformance has been a thing. We've seen dollar weakness in recent months, and so therefore we should continue to see U.S. deterioration in relation to what's happening in Europe and the UK. So if that is truly the case, it might actually show up in these charts. So if you're looking at the euro dollar, we still have that bull flag pattern we talked about last week. I think the biggest development that you can see here is that we have not broken out yet to the upside. Now, in the event we break out to the upside, we would have a bull flag pattern that would point to a move towards 114. Now, I want to show you why that's so important. I had one of our team members, Jack. He is a young gun trader. He'd actually brought this to my attention, and it's something that I think we need to be paying attention to. This is a weekly chart, right? You guys can clearly see that. If you take the high of July of 2008 down through those highs right there, it's going to take you right to about 113 and change. So the bull flag pattern actually points further than that. But in the event that we do get a breakout, imagine that the euro is going to start to struggle probably around that 113 level for a reason. Now, this, again, is in the event that we see some dollar strength this next week. I'm not sold on the idea that the dollar is ready to actually reverse. You know, one of the things I should mention is something I talked about a little bit earlier, is if you read this article, that this is becoming very disappointing for dollar bears. Dollar bears are betting pretty big that the dollar is really going to collapse. But what we've seen this week is even with the Fed cutting rates by 50 basis points, it didn't break the dollar down. And matter of fact, I bet you, I'd have to bet a lot of these bets that were made were on FOMC day. And given the fact that the euro the dollar index hasn't broken down just yet, they're probably getting a little nervous if they're short. That's why when you're looking at the euro, for example, as we just were, the fact that we're not breaking out above 112, I think has become quite a bit of a concern. So if you are trading the euro, be a little bit careful. If the euro starts breaking back below 111, that would be these levels right here. We start breaking back below 111, that's going to be a little bit, I think, near-term bearish for the euro, because then a lot of traders are going to start thinking there's a double top, a lower high, etc., etc. All right, now I also mentioned that there's the UK PMIs, and this, I'll tell you, the retail sales out of the UK came in stronger than expected. What we've seen in sterling is that bull flag. We've talked a lot about these bull flag patterns. Guys, if you go back to last week's week ahead video, I showed you bull flag after bull flag after bull flag. The problem is that not everything is breaking out. Sterling's breaking out. I just showed you the euro. It hasn't broken out. Aussie hasn't broken out. Kiwi hasn't broken out. Dollar Canadian hasn't broken down. Last week I said it's great when everything is moving in unison. Right now, you're only seeing the cable. So there are UK PMIs, and let's see if we can continue to see the outperformance of sterling. You know, one of the things I need to point out is that we're above the 50 DMA, and you can see by the time, in the event sterling actually pulls back, in the event we actually come down, the pound is going to come back down towards the 50 DMA. So I'm gonna say, if you got your notebook handy and you're taking notes right now on this week ahead video, write down sterling, 50 DMA, you know, that's an important support. I think that's going to serve you well moving forward, especially if you guys are trading on the long side of sterling. All right, continuing on throughout the course of next week, Monday night, we're going to have the RBA decision. Now, this is really interesting because a lot of people believe that the RBA could still maintain a relatively hawkish bias. They could be one of those central banks that could actually raise rates. So will the RBA be more hawkish on Monday night, or it would be Tuesday morning in Australia? That's going to determine whether the Aussie dollar really can break out or not. So what I'm going to say that you guys should do, and remember, this is from last week, we once again need to focus on this 68.30 level, 68.20, 68.30. A breakout above there, going to be super bullish. But let me give you the buts, because you like big butts, and I know you won't lie. That was a bad dad joke. Okay, anyway. I've been a dad for 20 years now. I can give them to you all day long if you want them. All right, anyway, moving right along. The Aussie. One of the issues that I take with the Aussie right now is, yes, the RBA has been relatively hawkish. Yes, the RBA might be the next central bank to raise rates. Sure, I get all that. But the Aussie hasn't broken out with stocks moving higher. It hasn't broken out with gold at all-time highs. It hasn't even broken out with copper trying to break to the upside. So what gives? Is it China? Is it growth concerns? That's why I really need price to confirm that we are breaking out to the upside before I get involved with the Aussie dollar near term. But maybe the RBA Tuesday morning might be the catalyst to do so. Moving right along, as we go into Tuesday, we go into Tuesday, we have the German IFO. We have Mexico's mid-month inflation data. Now, I'm gonna talk about the U.S. dollar Mexican peso because a couple of weeks back, I drew what you see there. Now, let's go back 2 weeks ago, the last time I showed you this chart. I said, hey, any move back down towards channel support is going to be a place to be long. Well, that happened, as you can see. So remember, these drawings are here from the week ahead video from 2 weeks ago. So what am I saying about the U.S. dollar Mexican peso right now? Well, for me personally, I'm long, and I'm already long because I like to do what I say in the videos. So I'm already long the dollar max. I bought it this week. But here's the thing. Mexico's incoming government comes in October 1st. Former President Trump, he's not losing right now in the polls. He's about even. And every time there's an assassination attempt on him, it seems like, and it's unsuccessful, obviously, he becomes more popular. How do you think President Trump coming back into office is going to treat Mexico and the new Madam President of Mexico and the border wall? And with the new judicial system out of Mexico that is probably more corrupt than the previous. The risk is that the U.S. dollar Mexican peso continues to trade higher. So I know we have inflation data coming out in Mexico, but what I'm going to be watching for is to make sure that the 50 DMA continues to hold. If the 50 DMA continues to hold, the risk for the U.S. dollar Mexican peso to trade back above 20 and quite possibly higher in the weeks ahead seems quite high to me. Okay, on Tuesday we have U.S. consumer confidence. We also have the Bank of Canada, Macklem, is speaking on Tuesday. And then Tuesday we have a 2-year note auction. Now I am going to go into the US dollar. I'm going to show you that, so make sure you stick around. But I want to show you what's happening in the bond market because I think it's really, really important, especially if you are thinking about what am I going to do with the dollar. See, if you're looking at the 10-year, the 10-year rallied to new highs, the ZNs. These are the 10-year notes. By the way, we have 2-year, 5-year, and 7-year auctions this week. Okay, so we have some supply hitting the market. Now, bonds have been relatively bid, but you can see how relative strength diverged. So, as the bond market pulls back in this ascending trend that you see here, as it pulls back, that means yields are rising. So remember earlier when I mentioned here that there are a lot of traders that are bearish the dollar, they're betting against the dollar, and they're not getting paid. Well, if yields continue to rally in the U.S., matter of fact, if yields continue to rally just in general, tends to benefit the dollar. So you got to watch the 10-year, you got to watch the bond market, you got to watch what's happening in notes and not so much in bills, but definitely in bonds. And watch what's happening with fixed income, because if yields continue to rise, that dollar is at risk for a continuation higher near term. Now, I will talk about the dollar index, so don't go anywhere. I'm going to continue on, but I'm just going through what else is happening this week. I will come to the dollar Canadian as well. So moving right along into the week, as we go into Wednesday, we have the Riksbank is meeting on interest rates. So let's take a look at the U.S. dollar Swedish krona really quick. This is probably one of the more pure dollar trades that you could take, and I'm not going to do much analysis other than referencing that it does play a part in the dollar index. It is a small portion of the dollar index itself, but take a look at the fact that we are holding key levels of support. Now, that becomes a really huge pivot for those of you that like to trade the Swedish krona. A lot of professional traders, a lot of bank traders trade the Norwegian crown and the Swedish crown, krona, crown, whatever you want to call it. I'm just going to tell you that we're on a pretty big pivot, pretty big support here. We tried to break down, hasn't worked. So if the Riksbank comes in any type of dovish, we might, and the US dollar squeezes a little bit, we could have a higher US dollar Swedish krona exchange rate by next week, the end of next week. Just keep that one in mind. All right, so we do have the Riksbank that's meeting this week. We also have new home sales and a 5-year auction on Wednesday. Now, come to Thursday, this is a currency that I really want you guys to pay attention to. This is going to be the US dollar Swiss franc, because we have the Swiss National Bank. They are meeting on interest rates early Thursday morning, which if you're in Europe, it's going to be obviously pretty early. But I want to stop for a moment. I want to talk to you guys a little bit about what's happening here in Switzerland and why I am bearish the Swiss franc. Now, I just came off of having a long Euro Swiss, just so you all know. I'll show you exactly what I did this last week. And let me move this because I know I'm in the way right now, but let me just show you. Okay. If you look over here to the right of your screen, you'll notice that the US dollar Euro Swiss broke out of a triangle. And when it completed that triangle formation, it was right about here. So I took my Euro Swiss off. It was a really nice 60 pip move. But I plan on continuing to play it to the long side. Now, you might be looking at this chart. Let me get rid of myself here really fast before I get in this conversation with you guys. You might be looking at this Euro Swiss thinking, okay, well, what can actually happen here? Well, if you look at it from a reversal standpoint, this could be an inverted head and shoulder pattern. That means it has a lot further to go. Now, how could this actually happen? Well, in my opinion, the reason why this could happen is because if you're the Swiss National Bank and you only meet a couple of times a year, yet you know the risk is that the Swiss franc could continue to strengthen. That means, in this case, we would be trending down like this, right, on your chart as you're looking at my face, right? We can continue to see Swiss franc buying near term because there are a lot of risks in the Middle East. There's a lot of risks in Ukraine, and the Swiss franc is a natural safe haven currency. So if you're the Swiss National Bank, what would you do? Well, I know what I would do. I would actually cut rates by 50 basis points, which would be a surprise to the market, which would be a stark warning to anybody who's buying Swiss francs as a safe haven currency to stop parking your money in Swiss francs. That's why the Swiss National Bank meeting this Thursday, I think, is going to be very important. I will be looking to buy Euro Swiss, dollar Swiss, selling some sort of Swiss franc currency before Thursday, just for that reason alone. So anyway, moving along, that's why I think you should be keeping a very, very close eye on the US dollar Swiss franc and the Euro Swiss as we head into Thursday. Now, the other thing that's happening this next week, well, there's a lot of other things actually. We have South Africa PPI. We have U.S. final GDP, unemployment claims, durable goods, pending home sales, and we have Fed Chair Powell delivering a pre-recorded opening remarks at the U.S. Treasury Market Conference in New York, all on Thursday. Now, I'm going to take you over to the dollar index, and this is one of those charts that I do write on and do analysis on throughout the course of the week. But you can see how choppy it has been throughout the course of this week following the FOMC. There's your FOMC decision. They cut rates by 50. Here's your immediate aftermath. This is the next day in Europe. This is in the next day in the US. And this is Thursday and Friday, the rest of Thursday and Friday. It has obviously been extremely volatile. But the more important thing that you should realize here is that if you've got so many traders betting against the dollar, the one thing they're facing right now is a false breakdown on the weekly charts. Why is that important? Well, if you're short dollars and it's not breaking down, you're going to start getting trigger happy to cover those shorts. So my 2 cents is if we can get above 101.50, we will trade back to 102. And if we trade much above 102, instead of this being a triangle, this is going to end up being a very big multi-year range that you see right here. That's why I believe on Thursday, all the data and Powell speaking could elicit some sort of rally in the dollar if we haven't broke down yet. All right, so just keep an eye on Thursday. Friday, a couple of last things that are happening this week. Friday, we have Norway. Speaking of Norway, they have retail sales. Watch the US dollar Norwegian krona. Let me just share with you how important this support is. Let's get rid of this. Let's get rid of this. And let's get rid of that. And we're going to grab this green line and we're going to drop it right there. Okay. And we're going to zoom in a little bit. And let's take up this trend line right here. We're going to bring that up to about right there. And you guys can see how important this support is. Now also keep in mind, this last week, the Norwegian Central Bank kept rates unchanged. That strengthened the US dollar Norwegian, or the krona towards the dollar, and that's why it dropped to support. But even with all this dollar bearishness and they cut rates by 50 basis points, the US dollar Norwegian krona failed to break down. So obviously, there's a lot of support here. So keep your eye on the US dollar Norwegian krona into next week. I told you I would cover the dollar Canadian. Friday, we have Canadian GDP. Now, last week, and I'll talk about this on the trades, the review section. I thought a break above 136.35 would be bullish. Yeah, that lasted for approximately, thanks Fed, that lasted approximately in Asia. It was in Asia when that happened. That lasted about 2 hours. So it was a nice little squeeze, got everybody out, and then came back down. The fact of the matter, though, is the US dollar Canadian, like a lot of dollar pairs, we're not really seeing a breakdown in the dollar. So that becomes a risk, especially with GDP on Friday. So in the event that the dollar Canadian starts to make its way back above this 136.35, I think you have to be careful with any shorts you might have in the market. The last thing that's happening on Friday is we have US PCE, University of Michigan consumer sentiment. And again, you know, with all this dollar, everything happening around the globe this next week, you got to keep an eye on all the economic data that's being released. Now, before we get into what's happening in gold, the S&P, copper, crude oil, maybe some of the other markets, before I get into that, I need to mention this. If you guys haven't taken advantage of this is the last week. So this is the last week. We will have the 8-year anniversary sale. If you are a subscriber of Forex Analytics and you have been a subscriber, take advantage of these prices. Get the prices while they're lower. So lock those lower prices in, because as long as you're an active client, you will continue to pay the lower price. We don't jack it up after a year or anything like that. We actually have traders that are grandfathered in from 8 years ago that are paying substantially less than what a new subscription is right now. Because as our prices go up, we don't ration them up on you, right? As long as you're an active subscriber. So get the Forex Analytics app. Jump in the chat rooms. You'll get all of our analysis on your fingertips, on your mobile application, on your desktop. You'll get notified when key levels are broken. You'll get notified when new analysis comes out. There's even private shows with myself, Steve Voulgaris, covering different markets throughout the course of the day that you have access to that are non-public. They're not available to the public. And plus, you have access to most of our team, probably 14, 15 hours a day, depending on, what analyst you're talking to. You can talk to me 14, 15 hours a day in the chat room. Ask me anything. You can come over here and say, oh, well, Blake, how do you feel about this analysis that I've read? And I can give you my opinions. Or we can have insightful conversations about the yen carry trade and what K-Man feels and how he feels about the carry trade and what could really provoke the markets into moving. Conversations like that are great for you as an individual trader and for us too, and for the rest of our community. So make sure you take advantage of Forex Analytics, take advantage of the pricing, get into our chat rooms, come say hi. All right, let's continue on. Like I said, we're going to cover gold. By the way, these are some of the tools that are available with Forex Analytics. Just included with, your subscription, like the live squawk feed, all this different analysis, live charting, basic technical analysis, harmonic analysis, Elliott wave analysis of 30 different instruments that are not just currencies. We have crypto, precious metals, S&P, DAX, boons, bonds, you name it. It's all there. Anyway, continuing on. Let's discuss what's happening in gold, because gold closed at a break in breakout territory, and that cannot be ignored. And I'm going to show you a couple of charts that are really, really important to me this week. So gold, boom, we completed that range extension. We talked about it last week. There's your range extension completed, and guess what? We literally sat there for how many days? Literally like the whole week we sat there, but on Friday we broke out to new highs. So last week when I thought that gold would have hit that high and reversed, I've been wrong thus far, but you can see here the daily RSI continues to be divergent. So where's the top going to be in gold? I don't know. Don't care because I'm not trading it, but I will tell you this much. In the event we get below In event we get below, this is what I'm trying to grab. It's just finding it a little bit hard. Back below 25.30. At that point in time, I would argue that a top is in gold, at least near term. And that's what I'm looking to happen. Whether it happens or not, no, I'm not too sure. I think we're getting close to a top. I thought it would have happened this week, but Friday, at the end of the week here, we are continuing to rally. One of the assets that's been rallying too is silver. We looked for a dip weeks ago. Didn't quite make it down to the 200 DMA, but we sure as hell got the bounce, right? I guess it's been a while since I talked about silver, probably several weeks. But you can see silver is attempting a breakout right now because gold is dragging it by its collar higher. And that's a fact. So can silver retest some of these levels up at $32? Sure, especially if gold continues to rally. Take a look at copper. Copper is above it's above previous support, acted as resistance, and we're nearing that 38% retracement. So copper is now starting to get towards really, really key resistance. And, from a harmonics point of view, if you look at it like this, that's less than 50%. Should probably make a move towards the 78% retracement over time, which would be 455. For those of you that are bullish, I think that's a good upside target for you in the event that we continue higher with copper. Another market, obviously, I want to talk about today before we get into the review of last week's trade setups, is the S&P 500. So last week we talked about if we do get a breakout, we're going to make it to the 127% extension. Well, I am still in that camp. I believe that the S&P, because we are holding this breakout point, can trade up towards 5,800 or 5,830 before showing some sort of reversal. I drew that out for you last week, and guess what? This week, there's no change. And it looks like that's where we're going. I know a lot of you are bearish because everything that's happening in the Middle East, deficits, excess spending globally, consumers weak, whatever the wall of worry that you've built for yourself. Yes, those are all concerns. But the stock market continues to climb the wall of worry. I still think we have a little bit further to go. Where am I wrong? Well, I'm wrong if we drop back below the breakout point. So basically, if you just look at the S&P, we still have to get below this breakout point before you can turn bearish. So that's pretty important to understand, right? Okay. One of the other things I guess I should mention that's kind of confirming the rally that you're seeing in risk. Take a look at what's happening in Bitcoin. Bitcoin continues to rally. We're building this long term, and I know I drew this for you before. I said, it's going to be a buy somewhere down there. Long term, we are still building this. Well, here, let me actually put that back on. You can go over to the weekly chart. And you can see this is a big cup and handle pattern that we're still building. So the handle is still forming. But what that also suggests is that we're probably going to see resistance pretty soon as we near the 67,000 level. Now, if we get to 67,000 and stop, then that means that ladle that you see here in the cup and handle pattern, right? The ladle, it's still developing. All right. Now, this is the time of the video I want to review what the trade setups were from last week, and then I'll give you some trade setups for this week. So let's start by mentioning the very first one. Oh, wait, before I do that. If you like these videos and you think they're instrumental in helping you make a good trading plan for your week ahead, make sure you give me a thumbs up, and then also give the team a thumbs up down there for getting this video out to you over the weekend. And also comment down below if I missed something, because it's Friday afternoon. It's been a very long week. If there is something I missed, please jump down in the comments below and let me know what I missed. And also, you can also, jump down in the comments and say hello and tell me what you think about the video. I appreciate it. All right, continue on. So review setup. The first setup was buy the euro dollar above 111.10 and add above 111.50. Well, if you bought it at 111.10 and then added above 111.50, you could have, well, first of all, it's still positive, so worked pretty well. But more importantly, like I said before, you got to be careful with the euro if we can't get above 112. If we can't get above 112, it's going to be a little bit of a struggle. But the bull flag is still playing. So trade setup number one worked. Trade setup number two. Dollar CAD said on a rally post FOMC, buy the dollar CAD above 136.35. Well, as I mentioned to you guys, this happened in Asia, which because it was happening in Asia, by the way, if you're in the chat room and you look in the trades room, you would know this. You could go in the trades room and you can go back and look what I did on post FOMC. I took some of my dollar Canadian longs off. You just have to go back and go through it. Anyway, I took some of my dollar Canadian longs off when we got to this resistance because it was happening in Asian trade. But I also picked up on dips too. So I'm still long the dollar Canadian, but if you just did that trade alone and you did it in Asia, you didn't make money. So one win, one loss. Third one, short gold only on a break back below 25.30. Well, I'll be the first one to admit to you that never happened. And matter of fact, if you look at the hourly chart in gold, right, here's gold, we came down to 125.40s and bounced like a bat out of hell. So if you knew that was a really key level of support and you just played it long back off that level, you probably did pretty well. But that trade never transpired. It never really came to fruition. So say one win, one loss, one never even happened. So those are the three setups from last week. So what are the three setups from this week? Setup number one. I am looking for the S&P to peak this week. I am. I am going to be looking to not sell the S&P at the 127% extension because I'm worried that this breakout could continue. But what I am looking for is I am looking to short the S&P on a break back below 26.25. Now, why do I say 26.25? Because actually it's not 26.25. It's the wrong number. It's actually right here, 26.20. Probably being a little bit more specific. 56.10. A move below 56.10, then it turns bearish. That means it's a false breakout. That means, that anybody who is chasing it long is going to get stopped out. That means we should have an acceleration lower. So looking for the S&P on a short, only on a drop back below 56.10. Trade setup number two. As I mentioned to you a little bit earlier in this video, I am looking for longs in the Euro Swiss. I will be looking for a long on a dip back to 94.50. So in other words, we're at 94.95 right now. I'm going to be looking for a dip like this to be a buyer, right? I'll be looking to buy the dollar Swiss somewhere down there at that level, ahead of the Swiss National Bank, because I think that the Swiss National Bank could indeed cut rates aggressively. Trade number 3, long dollar Canadian on a break above 35.60. So 35.50, sorry, 36.50. Jeez, it's Friday, it's late in the day. Let me just draw it out for you. A break above here, above this resistance. Now I'm already long, but this is where I'm going to be adding to my longs anyway. So break above that level, I'm looking to be long or add to existing longs. So that would be my third setup of the week. And once again, guys, gals, if you have enjoyed this video, please give it a thumbs up. If you haven't taken advantage of the 8-year anniversary sale, do it now. If you need access to more capital and you don't want to risk your own money, check out the Trader Funding Program and take the 20% off only for the month of September as well. But please come join us in the Forex Analytics chat room. I'd love to chat with you. I'd love to talk markets with you. If you want confirmation of what you're doing, or you want somebody just to talk about some trade ideas and have some conversations about what I think is a good idea or what I think is a bad idea, that's where I'm at. That's where you're going to find me. So I hope you have a great remainder of your weekend. I'll be on the morning F.A.C.E show. Remember, our shows are free. We have 2 free shows throughout the course of the week. You can go to the Flow show, which is our European show hosted by Ryan Littlestone and accompanied by K-Man. Or you can jump on the F.A.C.E show. Okay, that's the Morning Edge. The F.A.C.E show, where we interview, Dale Pinkert interviews a lot of great analysts, traders, economists, and you'll hear myself and the rest of the team there talking about what we think are the best trade setups and the best trade ideas for the day. It's a great place to be every day, and I'll see you there Monday morning. My name is Blake Morrow with Forex Analytics. Have a great one. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.